Hello guys and welcome back to Moonbets. For today's video, I'm gonna show you something that I found called Buffett Indicator. So yesterday I shared on Discord this screenshot right here. So this is called the Buffett Indicator, and all it tells you is if the market is strongly overvalued or not. As you can see here, year 2000, the market has crossed the red line, which is the strongly overvalued zone, and the market crashed. 20 years later, we have crossed the overvalued market and we still didn't crash yet. So I thought to myself, okay, I would like to see this indicator and just play with it a little bit. And I've looked online a little bit and I found someone who actually made this real and available to everyone. His name is Quantum Nomad, and he made the Buffett indicator. So he essentially used Warren Buffett's formula, and he just put it in an indicator, which you can add to your trading view for free and give it a try. Now, if you look closely, the 120 zone is the extreme danger zone. This is when the market would crash, and the 80 mark, which is a danger zone, is also a little bit risky. It tells you that the market is still overvalued, but what you really want to keep an eye on for now is that extreme danger zone at 120. So I've added it in. Here it is, BI, Buffett indicator. It only works with daily time frames and above. If you go below it, it's going to show you an exclamation mark and it's not going to work. So you would want to stick with daily or above. For the sake of this video, I'm going to do it weekly. Alright, so what we're looking at here right now is Spider. Go all the way back. Here we go. So this is the first time the market has crossed the red line, the 120 range, the extreme danger zone. And this was on year 2000. This was the dot-com era. Now let's just get a little closer to see exactly what happened. Okay, here we are. So the moment it crossed the first time, which is right here, it became overvalued and the market crashed. Now when it was under the line, people bought in the dip. It went back up again and it crossed the overvalued range and it crashed again. And this kept happening till it couldn't take it anymore. If you look closely, you can tell that there is some kind of a support line. Here it is. The moment that it crossed it, that's when the crash started. And if you also look closely, you can tell that there was some kind of a support line for the crash. It was following it. So it would just touch the support and bounce up again, and there is some kind of a resistant line right here. So what happened with SPY was it went from 153 all the way down to $80, and this is almost 45% decrease in value, which is crazy. Now let's go to the future, 20 years later, and here we are. You can tell that we had a situation back in 2018, January 2018, where the market was overvalued. SPY reached 286 and it crashed all the way down to 258, but things were okay. And over here in 2018, it kind of touched the overvalued zone and it went from 292 all the way down to 238. That was also a strong crash. Let's go to 2020, March. That's where we crossed the line heavily, the overvalued zone, and add in COVID, that's where really things went downhill and we crashed hard. SPY went from SPY went from 338 all the way down to 230. The Feds started pumping the market with money, just printing money like nobody's business. Stimulated everything, stimulated the market, and we had a massive bull run. Till now, we're still kind of having a massive bull run till recently. Recently, things are getting a little bit shaky. And if you look at the Buffett indicator, we are at the highest we've ever been. We are at the peak of the danger zone. So today is the 24th of March. Keep in mind, we're at the peak. I'm expecting this to crash. And when this thing crash, I think it's gonna crash even harder than... It's gonna crash very hard. Let's just keep it at that. I'm not gonna say how much, but just expect it to go below the 228. That's my personal opinion. Take it with a grain of salt. Let's go to another ticker. We got here Microsoft, and I went all the way back to 2000. This was the first time that it crossed the overvalued zone, and it crashed, as you can see. .com bubble. Go in the futures 20 years. We're all the way in the peak. We crossed the overvalued zone by a lot, and it's just risky. It's very risky to go long right now. I mean, do you really want the market to keep going high? When is this gonna stop? I think it's time for this to stop. It's time for this to go down. I know no one likes bearish videos, but sometimes you have to be realistic. Sometimes you have to warn people. Like, hey, if you're trading right now, just don't go heavy. Trade with an amount that you're willing to lose. And if you know how to short the market, then I'd recommend that over going long at the moment. So, guys, if you have family members or friends who are still heavily in the market, buying every micro dip they see, tell them, hey, play with a small amount. Play with an amount of money that you're willing to lose. Anyway, guys, I've put the link down in the description for this indicator. It's free for everyone. Go give it a try, share it with your friends, and trade safely. Moonbets out.